Hey everybody, it's Ron and Ellie back with this week's edition of Ask Ron. First up this week are two questions from Ted Peterson in Connecticut.
Hey Ted.
First question says, I didn't take taxes and insurance into account when negotiating payments on a current deal. How should I figure out the taxes and insurance when structuring deals in the future to make sure I'm covered?
You don't figure them out, Ted. You get them from the seller statements from the bank. It's up to the seller to tell you what the taxes and insurance are because it's escrowed with their underlying payment. And then you take that out of their payment. Now you know how much of it is principal and interest. So it can only come from the seller. And if you can't get that from the seller, there's another way to do it. You could always get a copy of their note, which is a recorded document most likely. And now the only thing that'll show on that is principal and interest. So if I take their total payment and subtract out that principal and interest, which doesn't change, then I know the rest is taxes and insurance.
Okay. Ted's second question says, a lead from a yellow letter on a free and clear house got me in touch with an owner willing to accept terms. The owner had the house appraised at $475,000,
Right.
but my comp showed an average of $417,000. Which figure should I use to negotiate the deal?
Well, let me answer this. My mom's calling. You may not have any choice. If the seller thinks it's worth $475,000, what I'll do is I say, can you help me? I can't find any comps that come any close or even come close to that. Could you help me with those comps? Perhaps you could get them out of that appraisal you got. And if his appraisal is real, you'll know very quickly. If it isn't real, you know very quickly. And quite often I find that when I ask the seller to help me find those comps, they can't do it, and they realize they're asking too high a price. Now I can tell you that sometimes that'll kill your deal because the seller just thinks he's going to find a greater fool and sell it for way more than what it's worth. So what? Better kill it now and spend a lot of time on it.
Okay. Next up is Katrina Manley from Florida.
Hey Katrina.
She says, Ron, I have your new terms course but need some help with scripts.
Okay.
When I call sellers to fill out the lead property information sheet and they answer no to a terms offer, which script should I use to convert that no into a yes?
Well, Katrina, now that you asked that question, you made me look in the manual for it, and then I realized it is not in there. And the reason it's not in there is because I wrote it after the terms event was taped for my own in-house staff. So because you asked that question, Katrina, we are emailing it to everybody who has the terms course, who bought it, and we will have it in the terms course going forward, thanks to you. So everybody watching, you owe Katrina for asking that question, and watch your email because we will get that out to you. It says no script at the top. Won't be hard to miss. It will be hard to miss.
Okay. Next up is Karen Martin in Ohio.
Hey Karen.
She's got two questions. First one says, sometimes I hear you say you put $10 deposit on some deals and $100 deposit on others. Can you clarify what determines your choice?
Oh, I use a $10 deposit on low-end deals where I know the seller could care less, and then if I usually use a $100 deposit when I get houses up around 300 or 1,000 or higher. And you might want to check because I know in the state of Florida, for example, our Florida Real Estate Commission for some reason thinks a $100 deposit is legitimate, whereas they don't think anything less than that is legitimate. I don't know. So we just put up a $100 deposit just to keep everybody happy. There's no real absolute ironclad reason for doing it. I guess you could get by with 10 because the truth is the seller doesn't care one way or the other. Any seller that balks about 10 won't care whether it's 10 or 100. That's their problem is not the deposit. Their problem is something else. So it don't matter which one you use. Now when I'm dealing with banks, you got no choice. You got to put up a $1,000 deposit on those bank-owned properties because that's their rules, not my rules.
Okay. Her second question says, what types of transactions can you use IRA money on and which should you strictly use LLC funding?
You can use IRA money on any kind of transaction as long as you're not living in the house or any of your linear descendants living in the house, or you're not profiting in any way personally from that transaction. The IRAs can do any kind of deals you can do other than what I just mentioned. However, if you're buying a property and taking over debt or having your IRA borrow money and the like, remember that that triggers UBIT, which is unrelated business income tax. So you might want to consider doing those deals outside of your IRA, but I always say, even if I got to pay tax on the deal, it's better for the remaining profit to stay in the IRA because it grows tax-free for the rest of your life. But the only kind of deal you will pay tax on is one that comes with debt, like buying a house subject to or buying it with owner financing in your IRA, or when you buy the property in your IRA and you go get a private loan on it. Any of those will trigger you.
Okay, last up this week is Ronald Miller with 2 questions for you.
Hey, Ron.
He's got a little bit of a scenario. So he says, my town is selling a property for taxes owed around $55,000 on a prime piece of waterfront real estate. The city requires 20% down payment on the bid, but I want to write a check up front for the entire cost to show the city I mean business. So his first question says, should I just pay the 20% down up front, or does a certified bank check for the full amount give me an advantage for winning the bid?
Well, first of all, the amount of money you put up front is not going to change winning the bid 1 iota. So, and secondly, I doubt the city would even take your 20%. I mean, they might if they didn't know what you were bidding on. But please don't be under the assumption that just because that's the starting bid that you're going to buy that property. And your odds are against you that you will win that bid. So do what the city says, make life easy. The last thing you want to try to do is train city employees.
His last question says, that same abandoned property has a life estate on it, and the grantee is still alive but does not reside there. So I think conditions of the life estate have clearly not been met. Does this nullify the life estate?
I have no idea, and I'm a little lost because if the city's putting it up for a tax sale, that's going to eliminate all that junk anyway, and all of it's irrelevant. If the city actually files for tax deed sale on that thing, that is the very #1 priority lien on any property anywhere in the country, and everything above that is gone forever and of no concern to you.
Okay, Ron, that's all the questions we have this week.
All right, see you guys next week. And hey, we're almost out of January. It's time for you to get out there and get started. Let's get some deals going. And I will be back next week. So we have one more before Valentine's Day. But I'm just thinking, ladies, don't you think this would be the year you ought to get him to go make some money so he can buy you all of the things that he promised you when he sucked you into marrying him? Eh? Valentine's Day's coming up soon, so keep that in mind. Tell him what you want on Valentine's Day and give him a deadline to get it for you. If that ring on your finger is not big enough, now's the good time. So get him out there and put a cattle prod on him and that'll get him to work. See you next week.